Welcome back. Stocks are higher this Friday morning. Welcome back, everybody. Take a look. All three major indices on the upswing. The Nasdaq right now up 0.5%, extending the gains yesterday after the White House confirmed yesterday that President Trump is, in fact, meeting Xi Jinping on Thursday in South Korea. Both leaders meeting next Thursday on the sidelines of the APEC summit, aiming to ease tensions and revive the stalled trade talks ahead of the November 1st deadline for President Trump's 100% tariff hike threat, which, of course, would be stacking on top of the other tariffs, taking a tariff on China to 157%, as well as the expiration of the U.S. China trade truce. That is November 10th. Overnight, meanwhile, President Trump terminating all trade negotiations with Canada, saying an Ontario government ad featuring President Ronald Reagan criticizing tariffs was a misrepresentation of the 40th president's words, this adding new uncertainty to the $900 billion trade relationship between the two nations. Joining me now is former Chrysler and Home Depot chairman and CEO. He is the founder of Accelerate, LLC, Bob Nardelli. Good to see you, Bob. Thank you so much for being here. What is your reaction to this latest wrinkle with President Trump terminating negotiations with Canada?
Yeah. Well, good morning, Maria. I loved your opening song. What a nice tribute to you this morning.
Rest in peace, Joey Ramone. Joey Ramone wrote that song, and I love it.
Joey Ramone.
Yeah.
So here's the key word when I talk to a lot of the CEOs and businesses I've been dealing with, both middle market and Fortune 500, is the CEO and the organization needs to stay nimble. The ability to stay flexible and nimble, because every day we're hearing something new. Now we just heard about Canada. We hear about China. So you need to be able to have an organization that is quick to response, nimble in their actions, and steady and stay focused, on running their company. So that's number one, Maria, on tariffs. I think there's still a little bit of a drag, a hangover, if you will, on tariffs, on a lot of the food and energy and so forth that we're seeing today. You had a great discussion. I look forward to your interview in the Midlands. I couldn't agree with you more about energy. I've been a zealot as long as we've known each other. And when this past administration shut down the export of LNG, we lost one of the biggest geopolitical advantages we had. And so I'm really encouraged with the recovery of energy. I'm encouraged that the president now is restoring our energy reserve. And you're exactly right in your opening comments. It's one of the biggest advantages we have with geopolitical and globality in our country.
Well, I mean, incredible to me that the Permian Basin is expected to represent 70% of all of our oil needs in the coming 15 years. It's at 45%. I mean, this is such an obvious strength of America, given the adversarial relationships that we have with Russia and Iran. You would think that the U.S. wants to be as strong as possible in this realm.
Yeah, I couldn't agree more. Again, all we talk about now in a lot of these businesses, how do we get involved in data centers? How do we support data centers? And the key to this is exactly your point. We need energy to run these new data centers. We need new technology and two-phase cooling with water because of the high speed and temperatures that they put off. So, my last job at GE was running GE Power Systems and now GE Vernova. And when we left there, we were shipping 300 gas turbines around the world, and their business, if you look at their stock price, they're certainly experiencing the same kind of recovery with the demand on energy that we saw back in 95 to 2000, Maria.
Meanwhile, let me switch gears, ask you about something else, obviously quite important to the U.S., and that is chips. Intel is surging this morning, Bob. It had a strong earnings beat. Yeah. It's talking about AI driving chip demand. Ford also beat third quarter expectations. However, Ford lowered its 2025 guidance after a major fire at New York supplier plant disrupted truck production last month. The company is working to recover the losses, boost pickup output next year, and the stock this morning is up 3%. Intel's up 8%. We're waiting on earnings from Procter & Gamble, General Dynamics as well, and of course, big tech is going to be a big focus next week, Bob, when we get all the majors beginning to report their earnings. What are your expectations for that, and how would you assess the earnings period right now, Bob?
Yeah, well, you gave us a great overview there. If you think about the tech stocks, they continue to support the return in the market. And I think overall, if you look at Apple and Microsoft, Alphabet is a little flat, but the other two are up significantly. So they continue to drive. And again, you talked about the chip manufacturer. So I think we're going to continue to see tremendous resilience. I can't explain how this market continues to grow as it is. I'm tickled to death about it, but it's again, led by the tech stocks. If you think about where we're going on some of the other things, if you think about Bitcoins, for example, up significantly, Ethereum up significantly. So those of us that have been, very cautious and reserved about it are going to have to yield and say, maybe the market was right in what's going on there, Maria. So,
yep.
I think what we're seeing too is, the Fed has to drop the rate again, another quarter point at least. They should have done 50. We've seen home loans go from 6.9 to 6.2. Not enough to really fuel the market yet, Maria.
Yeah, and we'll certainly monitor that meeting next week, October 28th and 29th in Washington for the Federal Reserve. Bob, always a pleasure. Thank you, sir.
Thank you, Maria.
All right, Bob Nardelli joining us. We'll be right back. Stay with us.